Patrick, thanks for coming in.
You bet, Pete. Anytime.
Yeah, so you work for Goosehead Insurance.
I do, yeah, for the last 5 years.
Yeah, so I have Patrick Kono here, and you've been with Goosehead now for 5 years,
Yep.
and you've been an agent now for 12.
Yeah.
Awesome.
Seems like it's gone pretty fast.
And this is all with property insurance,
Yeah, property and casualty, right?
property casualty.
Yep,
Yeah,
for sure.
So a lot of homeowners, a lot of homeowners insurance policies.
The big majority of that, yeah, for sure.
Yeah. Awesome. Well, I really appreciate you coming in. So the big topic in today's world, especially in California and a lot in Redding, as it relates to real estate and in homes, is insurance.
Right.
And that's why I wanted to have you on, is talk about insurance in our area and then also in California.
Sure.
So as I understand it, and my insurance for my house in Palo Cedro, I have a home in Palo Cedro.
Right.
I was paying about $2,500 when I first started. Now it's about $5,000, so it's doubled in the last 2 years.
Right.
2.5 years. So I imagine a lot of other families in Shasta County are experiencing insurance going up.
Right. I mean, the days of $800 yearly premiums are pretty much out the window now, right? Things have taken a turn, and I'd say that's the last year and a half to 2 years, right? It's become a big impact now, but it's been a slowly changing thing in the last 2 years.
Yeah. So I wanted to talk about this because, as you are well aware, so you're a broker?
Correct.
So you can broker to multiple different companies.
Yeah, we have over 50 different companies we can work with.
50 different insurance companies.
Correct.
Okay. And I do mortgages, and so, I've found that you guys are able to write a lot of policies that other insurance carriers are not
Correct.
able to write.
Yeah.
Why is that?
So Goosehead Insurance is a franchise, right? So we have agencies across every state in the United States. So Goosehead's model is they do all the hard work for me to get all those carriers. They get them appointed, and then they give us access to them. So whether it's a carrier that's predominantly on the East Coast or the West Coast, Texas, Panhandle, whatever it may be, we have access to those carriers. And so
Got it.
While they are called non-admitted carriers, they may not be licensed in California. That is pretty much what we only have left in California, right? You talk about the other companies that have paused insurance, like State Farm or Allstate, right? What's left? So these companies aren't new.
They've been around. So these are smaller companies that just provide insurance.
They're larger companies, but they just typically we would always try to use an admitted company, somebody that's licensed in California first, right?
Got it. So let's break that down.
Sure.
So you're saying that there's companies that can insure here that aren't necessarily licensed.
Correct.
Here. How does that work?
So I mean, there's a couple rules. I mean, obviously you have the Department of Insurance, right? That regulates the insurance companies in California.
Okay.
So if you want to be an insurance company in California, you have to apply and be appointed, right? So then you're licensed and you have to follow DOI regulations.
Okay.
And I'll say DOI a lot, but that stands for Department of Insurance.
Okay.
So in order to do that, you have to follow certain guidelines, and that would include, rate increases have to be filed and approved. Certain areas have to be pre-set for premiums, right? So you make all these set figures, set requirements, and then you're golden, right? But say an insurance company doesn't want to deal with that, or maybe they're licensed in Texas or Florida or whatever it may be. Those are large states, large companies. They deal with large claims, so they're not fly-by-night companies. They're A-rated companies, right? They just don't deal with the DOI regulations in California.
The Department of Insurance regulations.
Correct.
And so what you're saying, what I heard you say, is you have multiple other companies that you could have been using, but you haven't, just because other companies were easier to get insurance through, quicker, maybe better processes. But these other companies, they're insuring in California, but they're not necessarily licensed. Why would they be giving insurance, or why? I guess let me ask you a different way the question. Why would an insurance company get licensed in California when they can still write a policy in California and that way they wouldn't have to follow the Department of Insurance, or
Right. One of the
Okay.
biggest fears of not being licensed in California is that if for some reason they go insolvent, they don't have to pay out the claim, right? So this happened in the campfire.
Oh.
If you remember the campfire in Paradise, there was a smaller company and out of San Jose. I can't remember the name, but they mainly insured manufactured homes. Well, guess what? Manufactured homes was the biggest loss in the campfire. Well, when you have such a large loss like that, if they don't have the assets or the money to pay out those claims, they can just go insolvent.
So then they can go insolvent. But if you're licensed, you are held to a higher standard.
You're held to a higher standard, meaning you have to show profitability versus your losses. You have to have that loss ratio. You have to
Right.
have enough assets to be able to handle the claims for the policies you have,
Gotcha.
right? So also, you also agree to put in money to a fund, hence the California Fair Plan, right?
Oh, so the if you're licensed
Mm-hmm.
and for the state for it to do insurance, then they also have to participate into the fund, which is the California Fair Plan.
Correct. It's a slush fund.
Slush fund. Yeah.
So they put money. So you have the right to say no in California, right? You're just like any other business that wants to be in California.
Yeah.
You can choose not to participate or serve your clients, right? By saying no.
You could say no, but still provide insurance.
Correct. So by having that opportunity to be licensed, you have to be able to put money into the slush fund for the California Fair Plan for the ones that you don't qualify for your company, right? Right. So everybody has to have insurance if you have a mortgage, right? That's the law.
Correct. Yeah.
Correct. So if an insurance company such as AAA or Farmers or State Farm says no, there has to be something for them to go to,
Which
in
is the
condition-
California
which
Fair
is the
Plan.
California Fair Plan.
Right.
So what you have today is all of those admitted companies like State Farm and Allstate and many, even my own, Progressive and Mercury, they've paused insurance in California, which means they're not writing business. So if they're not writing business, we have to find the next solution. Well, we have many companies, therefore we underlie the next option, which is the non-admitted companies.
Non-admitted. And that's important to
Correct.
understand.
Correct.
Non-admitted.
Non-admitted.
Non-admitted. And non-admitted basically just means they're not necessarily held to that higher standard. And they could be a great company. It could be a great insurance company, been around for many years. It's just they're not regulated by the state.
They're not regulated by the state.
And the reason why an insurance company, let's say a State Farm or a Progressive, would want to get licensed in the state is, does this help them write more policies in general when they are writing? Is that why they want to do the whole licensing? Why would
That's a question for the insurance companies themselves, right? Whether they want to get into that boat. Of course, California is a very big state, right?
yeah?
So a non-admitted company isn't actively marketing California, right? They're just happen to be appointed with an agency who would sell for them. Whether a State Farm or Farmers, where they're licensed in California, they actively market. You see them on the Progressives on TV, right? So you see them actively marketing.
Yes.
right?
Yeah.
You won't see any of my non-admitted companies actively marketing. in
Because they're not allowed to.
California.
Or they.
True, but they're just not licensed in California. They're not pursuing business in California.
But you can still write. They can still write in
Sure.
California.
Yep. We just have to acknowledge and explain to the client that this is a non-admitted carrier. However, they are still A-rated. They have their license.
There's other ratings.
Sure. They're
Got it.
licensed in the bigger states too, Texas and Florida, who have the hurricane losses and the flooding and a lot of stuff, right?
Yeah.
So they can handle the large claims.
So they may be licensed in other states, but not necessarily California.
Correct.
And so they're held to that state's higher standard.
Correct.
They're held to, so they still have to keep a good books and have they still have some accountability. They still have
Oh, yeah.
accountability, just not necessarily California's.
Just not California's.
Wow, this is so interesting. I had no idea.
Yeah. And that's the reason why we're in the boat we're at, because California is such a blue state. We'll go that route, right? Right. It's the politics that have caused the insurance companies to be
Yeah.
pausing business, right? It's the ability to file for a rate increase but not get it, right? Nobody has approved a rate increase.
So I did want to touch on that. It is one of my questions
Yeah.
here. So the Department of Insurance, they've been putting a cap on how much insurance companies can charge. Did I get that right?
Typically, there's a cap on a rate increase request. Typically,
From
it's
year
at
to year.
6% is what you averagely get approval for.
From year to year.
Correct.
So 6% a year they can raise, not anymore.
I'm not saying that's not the case. Sometimes they can get more, but they have to justify it. They have to
Yeah.
show the reasoning for
I
it
see.
and then get approval. It all has to go through a process.
Yeah.
Right.
Got it. So when you have a campfire, a paradise fire, you have what do they call it, Snowmageddon
Yeah.
in Shasta County.
Yeah.
All these insurance claims started coming in. I mean, Snowmageddon was like, that was no walk in the park. That was like
Right.
hundreds and hundreds of roofs that got repaired through
Hundreds.
insurance companies, homeowners insurance.
Trees falling on homes. So
Trees.
yeah,
And
for
I mean,
sure.
that was a huge claim for insurance companies,
Right.
as along with the car fire and
Right.
paradise and all that. So when you have these, events that happen, they need to raise the rates more because they're having more claims. So it's just, in a standard insurance company, they raise their premiums when they have more claims, like life insurance. If life insurance, more people are dying, or let's say someone, like they can raise the rates based on, if someone smokes or not.
Exactly, right. So the higher the risk, right,
Yeah.
the more costly the premium is, right? Life insurance probably isn't a great analogy, but I mean, it's even with auto insurance. I mean, we won't get into that topic, but autos cost more to build. They have more technology. The labor to replace them parts or repair the parts has gone up. So the cost to repair a claim has gone up significantly.
Oh, because the cost to repair, inflation,
Right.
lumber.
Exactly.
I see.
So
So,
you're
the
talking-
now you have the cost to replace
Right. So
that they
all
have
of
to
that-
factor in.
Correct.
Okay.
So all that's going to change everything, right?
That makes
The
sense.
economy is raising prices everywhere, right?
Yeah.
Food costs more, right? So it's natural that your electricity costs more, your gas
Yeah.
costs more. Why not the insurance?
Yeah, it makes sense. So here's a question: we've seen a trend of major insurers either exiting California market or imposing stricter conditions on policies. How is this affecting competition, and what implications does it have for homeowners seeking affordable insurance?
Right. So we talk about the admitted companies, right? There's
Yeah.
Allstate and State Farm. We know they paused insurance, right? They know they're not writing home insurance.
By the way, did most all admitted companies get out?
Not all of them. I mean, we
There's
have
still
companies
some.
still that we use.
They're still admitted.
But that's the other part of your questions, right? The restrictions that they put in place, right?
Got it.
So you talk about you take away 2 or 3 big carriers that write business,
Yeah.
but everybody still needs insurance. Where are they going to go? To all the other companies, right? So
Right.
like Progressive or Mercury, right? Well, you can only write so much business. You have to slow down all that new. If everybody can't write business with Allstate and State Farm, they're going to go somewhere else.
Yeah.
These companies can't absorb all those homes insurance. They can't do that,
Yeah.
right? Because then they become inundated in a zip code, and then
There's
the
a
risk
ratio
for loss,
There's
right?
a ratio for loss. So like you can't put all your eggs in one basket.
Exactly.
Okay.
Right? So you have to manage that risk.
As
So they have to
insurance,
do ways to stop writing business legally, right? Because legally they're licensed. Legally they have to write the policies
Yeah.
if they qualify in the system,
Yeah.
right? If you have a subdivision and you're right next to a fire department, you qualify, you check all the boxes.
You still have to.
Legally they have to cover you. They have to insure you at the rate that they've already set with the Department of Insurance.
Oh, I got it. So they can't say no
Right.
if you're delegate or if you're
If you qualify, if you check the boxes, right?
right. But this is only for licensed, or this is for companies that are with the state.
Right.
But you can, if you're not with the state, you can decline anybody. Yeah.
You still got to check the boxes.
Got it.
You still got to qualify and meet the risk with the underwriting requirements, right?
Totally, but
But-
you can, but they have the ability to say no if you do check all those boxes.
No,
Oh, they still have to
they
write.
still have to write it,
Got it.
right? If I check the boxes legally,
Yeah.
it qualifies in their
see.
system, right? But when you have an admitted company who's trying to pause business and not write any more than they have to,
They
you
can't.
have to figure out how to stop that from happening.
The only way to do that is to get out.
The only way to do that is either get out or figure out a way to put in restrictions so they can make changes like pre-inspections, right? We need to see photos of your house before we insure this
Yeah.
home, right? And then they can look at the photos and go, actually, that tree's too close. We're not going to insure this house. They can
Yeah.
find a way to say no legally. Kind of the same thing with if they don't want to get out, but they're trying to cut back on their policies. You'll see this happen a lot where the renewal comes up, but they say, well, we actually need you to cut back these trees. We actually need you to paint that eave. We actually need you to remove that bush. And if you do all of that and send me photos, we actually may renew you.
Yeah.
But what they're really trying to do is secretly try to cancel you legally by not making sure you don't do any of that.
Yeah, so they're trying to limit the amount of risk they're having out. In
Exactly.
Yeah, because they know they don't want to be saturated. They don't want to put all their eggs in one basket, and so they got to protect their nest egg, and so that makes total sense. Wow. So thank you for answering that question. I got a few more questions here. So do you know any changes being made, policy structures such as sublimits or requirements for property updates, and how do these changes impact policy holders?
So it kind of like we're talking like if a company's going, if you're up for renewal, right?
Yeah.
The company has the right to say, we've done an inspection on your house through satellite imagery, and we show that this tree is too close or it overhangs the roof. You need to trim that, or you need to upgrade the electrical panel. A lot of these insurance companies make you take photos of the electrical panel, the plumbing, all that stuff. And if they feel that it's outdated, they'll cancel the policy. They'll say that you need to update this, or we'll cancel you.
Got it. Okay. Yeah, I think, okay, that makes sense.
Yeah.
Wow, there's so much to unpack here that it's crazy. So with your average homeowner that owns a home currently, or even is looking to buy, what tips would you give them? Like on the outskirts of Reading, you have Cottonwood, Palisadro, you have, some parts of Anderson, and you probably know these areas more than I do of higher risk. What creates more risk and higher cost for insurance?
So the number one thing I'd really point out, especially if you're looking for a house to buy, where's the fire department? Make sure that it's not more than 5 miles from your home. If it is, you tend to basically, there isn't a single company in California that will write a home more than 5 miles, and that's my non-admitted companies too.
So there's not a lot of companies that will write more than 5 miles out.
Right.
If you're more than 5 miles out, what are we talking increase in price wise?
It's
California Fair Plan.
It becomes California Fair Plan. Right?
I see.
And we obviously all know that effective 12/1, California Fair Plan took a huge rate increase. Right.
Let's talk about that, because I don't think everyone knows this. I heard this, but I'd like to understand it. So California Fair Plan is increasing their cost?
They already did. So in October of 23, they came up with a new platform for quoting the Fair Plan. In November, that became live, and
November,
right? And it was a huge hairball mess. It caused delays in mortgage closing because nobody can get a quote back for 45 days.
Wow.
Either way, my theory is that they were really trying to stop quoting until 12/1, because the 12/1 became a huge rate increase, which passed, meaning that an insurance company like California Fair Plan imposed a rate increase of a max cap of 100%, which means they have the legal right to double your premium.
They could double it.
Double your premium based
Holy
on
cow.
your area. So most likely where that's going to see the effect is in the outskirts of town, Shingletown,
really,
maybe Palisadro, Bella Vista. You have to really match all the boxes, right? If you're more than 5 miles from fire department, you're most likely in that rate of 100% rate cap.
Wow.
On average, we had the ability to try a quote before 12/1 and after 12/1. Average was 50% is what we've seen.
50% increase in premium.
Correct.
So if I'm paying $3,000 a year, it's now $4,500.
Correct.
Wow.
And that's just the Fair Plan.
And this is for renewals.
And new business.
And new business. Yeah. Renewals and new business.
Right.
Yeah.
So stay away from homes
if you can.
That are more than 5 miles, if you can, right?
Yeah. Let's say you already own a home, and like me, and I'm in this area of higher zone, and they increase the price.
Yeah. Part of the price increase notice that went out with the Fair Plan is that they also have the legal right to tell you ways you can reduce the premiums, right? There's a couple checklists that they send you pre-renewal or even at new business that says if
you trim this tree.
Yes. Yeah. Can you verify that you have enclosed eaves? Can you verify that your roof is...
Send us pictures.
Yes. And all of that can reduce the premium. Also what they call Firewise community, right? Shingletown's the only one that has Firewise community. So what that means is that the Cal Fire has worked with the California
Fair plan.
to create a safe area where they have great fire.
So they're
solutions.
managing they're managing the overflow, the brush, and they're
Correct.
helping keep the risk down for a brush fire
Right.
or a
Right.
forest fire.
And so your fire department will have that certificate that you can use to upload to the FAIR plan to get that.
This is in Shingletown?
Firewise. Yeah, Shingletown's a Firewise community.
Firewise.
Mhm.
Okay. And so maybe a homeowner might not know this and they could get a discount if they had this.
Correct.
So this is called a Firewise community. And what's the document called?
It's just a certificate. It's a Firewise community certificate, and your fire department will have that.
Oh, so they can get it from the fire department.
Correct.
Have you experienced homeowners that don't know about this and they then go to the really?
Yeah.
It happens a lot.
Yeah.
So they could be saving on their insurance. And
They could be.
wow.
Yeah.
And
I
how
mean,
much of a savings is it?
It varies.
Firewide.
It varies based on the construction of the house, whether it's a manufactured home, stick-built home. It's going to vary a lot.
Yeah. So it's called a Firewise certificate.
Mm-hmm.
Okay. Wow. Didn't know that either. This is awesome. And so the homeowner's going to get this notice and they're going to get the recommendations of improvements or the brush they need to cut down or take pictures of this, take pictures of that. They could go get a Firewise certificate from the fire department, and all of this could help bring that cost down.
Yes.
Let me ask you this. So let's say I bought 2 or 3 years ago
Mm-hmm.
and I had to get the FAIR plan at that time. Are there homeowners right now that currently potentially have a California FAIR plan that could potentially now be insured by a regular company?
It is possible. So with the ability of our carriers, we do it a lot where we can actually sometimes get new carriers that will take you off the FAIR plan, right?
Got it.
It happens all the time, to be honest with you.
Yeah.
So
Huh.
we get new carriers frequently. In fact, we have a couple new ones coming in January.
New carriers.
New carriers, right?
Yeah.
Which allow us to pretty much, look at all of our FAIR plan policies and say, hey, can we get you off that, right? Or even purchasing new homes, right?
I see.
Yeah. So that happens quite a bit. In fact, we have a couple companies that particularly try to write insurance to get people off the FAIR plan, right? So their main
Oh, wow.
objective
It's to
is
save.
to write home
So
insurance.
this seemed like a little like an opportunity in the marketplace,
Mhm.
like and they could come in, get some market share of premiums.
For sure. Yeah.
Yeah.
They're targeting that. Correct.
Got it. Okay, cool. Well, that's cool because it's competition bringing the price down.
That's true.
Yeah.
Right.
Yeah.
I mean, the FAIR plan is meant as a last resort, right? They didn't expect as many people to be on the FAIR plan as they did, which
Yeah.
implemented the changes that they did in December 1st. Right?
Yeah.
So while they did come up with the rate increase, that's not a
Question: why did they increase the FAIR plan? Why did they get allowed to double the price of the cost?
that's politics.
So
And they
it was a state decision.
Sure, there's a lot in the state that goes on that they're trying, and I'll give them credit to that. They're trying to solve the issue we have with the insurance in California.
Yeah.
Right? They're trying to bring back the admitted companies like State Farm and Allstate. They're
Yeah.
trying to get them back. But you got to realize they haven't had a rate increase in 5 years, which means that in order for them to
California FAIR plan hasn't.
no, your admitted companies that are paused, State Farm and Allstate.
Oh, they haven't increased their price for 5
they
years.
haven't had a true rate increase approved
Higher than the normal 6%.
at all.
Oh, at all?
Right.
It's been declined?
It's been declined.
Really?
Yes, which is why they've been they're in the boat now. So for 5 years, they haven't had a rate increase per se approved by the Department of Insurance, which means over this 5 years, they've been slowly not getting to raise their rates to become profitable. So they
So
have to
5 years
pause.
ago, 5 years ago, they were profitable, and then all of a sudden, car fire comes.
And it's not even
Christ.
particularly just the car fire or the campfire. It's all losses, right? It's all claims. It's all histories.
And it's cost of repair, cost of replacement value.
Right. And it's also cost of reinsurance, right? So even these large companies have their own insurance companies, right? It's called reinsurance. They insure the home.
they're insuring their portfolio.
Correct.
So
For catastrophic losses.
If they have a catastrophe, there's other companies, bigger companies,
Mm-hmm.
bigger fish that is insuring. That's kind of like the default swap credit default swaps back in
Yeah.
2006, 2007. But go
Right.
ahead. So
But-
there's other companies that insure the insurance
Correct.
companies.
So
Okay.
let's say 5 years ago, your house cost the insurance. You paid $1,000 a year for your insurance to insure your home. Over the time, their own insurance company may be increasing the premium, right? So you pay $1,000, but the insurance company pays $500 to insure that home with their own insurance company. Over time, the reinsurance company can raise the rates anytime, right? They can.
They're
whatever
not
they want.
regulated.
No. So they now your insurance company is charging.
I think we're gonna have to put a visual on this
Right.
for our customers our viewers to understand this. So essentially, you have the insurance company that's insuring the family, and then you have another insurance company insuring the insurance company for a catastrophic loss.
Correct.
So if a big hurricane in Florida happens or in California, a big wildfire, and it's over a certain amount, then this insurance company that's protecting the insurance company is going to pay losses or a claim for that insurance company.
Exactly.
And this insurance company that's covering the insurance company that covers the borrower, they actually are not regulated, and so they can raise their price at any moment. And so they raise their price on State Farm, Farmers, and so, of course, then if they're paying more cost of doing business, they have to raise their rates, but then they can't because the state is not letting them.
You got it nailed down.
Wow.
Right? So now they're legally have to sell you insurance on a house that qualifies and checks all the boxes, even if it sells them at a loss.
Yeah. Wow, that's insane. I had no idea. Okay, so I understand now why they got out of the business, because they have to write, and their cost has gone up. All the costs have gone up, so they have to write. So they just get out completely until they can actually raise their prices. So I guess my next question is, why did they allow California Fair Plan to raise their price and not these other companies?
I don't know the answer truly on that one, right?
Is it a good question? I mean,
It's a very good question that even
these
probably
questions
deserves more digging.
And are other people asking the same question?
Sure.
Yeah.
Right? And I can't justify why they did it, other than the part of what they're trying to do is if they the whole scheme of things is that they're trying to raise the rates in the fair plan, which makes it unattractive. At the same time, trying to give the carriers that are paused a rate increase so they come back.
So they can come back into the market.
And
So they are working and talking with these companies.
Exactly. They're
So
working, they're negotiating, they're trying to come up with an agreement where they'll come back and also increase their appetite, meaning have a higher appetite for risks of homes in areas with a higher risk, right? So State Farm, yes, you can come back. Yes, we'll give you the rate increase that you want, but you have to write homes in Shingletown. Right?
Oh, so they're saying, hey, you can't just be picky and choosy. You have to, yeah. And so now it's a negotiating game with the state. It's like, hey, we'll come back in if you don't require us to, write policies in this super high risk area.
But the state the Department of Insurance is wanting them to cover more of those high risk areas. So the fair plan has less.
So the fair plan doesn't necessarily want to have the exposure it does.
Correct. It wasn't intended for that.
How long has the California Fair Plan been around?
Oh, for a long time, since the beginning. I would not know that year, but I mean, it's been
so longer than just the last 5 years.
Oh, yes, for sure.
I had never heard of the California Fair Plan up until like 3 years ago.
Oh, well,
yeah.
3 years ago, we've already had the campfire and the car fire, and
4 years ago,
we've
maybe
now started to see the effects of what's out there.
Yeah. So I mean, I didn't know about California Fair Plan I don't know when I first found out about it, but I was like, wait, what? So the Fair Plan's been around for a while. It's basically there to still get insurance if no other company will do it.
So picture 10 years ago, we didn't care about fire, right? The hazards. We had people writing homes all over the place. Mm-hmm. What you really mainly got declined for was the amount of claims you had, right? Insurance company can still deny you for claims. So if you had 4 or 5 claims because the home flooded or whatever,
Oh,
they can say no.
they could still say no. They could picky and choosy with that.
Right.
If
So
you have
that's,
claims.
back then that was a main reason for the fair plan, right? So if you were told
Oh,
no,
I see. You could still
can go get insurance.
That makes sense.
Now it's been more of a use because nobody's writing.
Yeah, they just get out. Yeah.
Now by law I have to have the fair plan.
Yeah.
So they can't say no.
Wow.
Fair plan doesn't say no. Well, they can say no still if you truly have a home that is not well kept, right?
Yeah.
It's got to be habitable.
Yeah. It can't have health and safety issues.
Correct.
Yeah, that makes sense.
Yeah.
It kind of reminds me of 2006 and 2007 when we went through the mortgage meltdown because the FHA loan really that loan took off during that time.
Yeah.
Like everyone was doing FHA. FHA loan wasn't meant to be like for everybody.
Right.
And the mortgage insurance for FHA is the same cost no matter who you are, no matter what your credit score is, and it's still that same, but they had to raise the mortgage insurance because of so many claims.
Mm-hmm.
And so they raised the cost of the mortgage insurance. They lowered it some since then, but before 2006, the mortgage insurance cost for an FHA loan was 0.35%. Or you could pay, I think it was 0.35% and like 0.5% upfront. Well, they raised it all the way to 1.25% from 0.35 plus a 1.75% fee up front.
Crazy.
Yeah. But it's come down a little bit, but it makes sense. So like they raised the price there.
Yeah.
So okay, so they raised the California plan now because they probably are like, hey, we need to raise the price because of the cost of everything's going up. Right. But it's the same reason why State Farm and all the other major carriers, Progressive, are wanting to raise their rates.
They still got to have the portfolio to cover losses, right? So they have to raise the rates.
Yeah.
As much as business they've been writing in the last year and a half, they have to raise the rates to become profitable, to maintain enough losses or enough money to cover the losses, right?
Yeah.
So the more risk you write, you got to have something in the bank to cover the losses.
Yeah.
Otherwise, you're no better than a non-admitted
Makes
carrier.
sense. Yeah.
Right. So
for a while there, FHA was at a loss.
Mm-hmm.
In other words, the government was paying to cover the losses of the claims until over time it started becoming more profitable.
Right.
When the foreclosure stopped happening. So that makes sense.
Right.
So California Fair Plan, they got to be profitable. They got to have money in the bank to pay the claims.
Right.
Okay. As far as our specific area in Shasta County, what areas are, I know you said 5 miles. I get that. But are there, like I was surprised. I'm looking at a house and I'm looking at maybe buying this house down in Cottonwood.
Mm-hmm.
It's off Hooker Creek.
Mm-hmm.
And I was surprised the premium came in. I think you sent it to me. It was like $250 a month, which was, what is that like per year? Like $1,800 or something like that.
Yeah, it's pretty close. Yeah.
Yeah, I was like, wow, that's really good. But that's from a what do you call it?
So that was a non-admitted carrier.
Not admitted carrier.
Right.
Not admitted carrier. Yeah.
Right.
Which I'd be okay with it. I mean, I'll research the company and make sure that they are a legitimate company, and
and Goosehead's not going to take on any carrier that's not going to have the A-rating companies, right?
Yeah.
A-rated is what you're looking for.
A-rated.
A-rated.
Where do you? Okay, that's a good question. Where do you go to find the rating of these companies?
Yeah, so there's a couple different companies. They're independent companies. One, you can subscribe to them, and you can list your business on there, just like Google reviews, right? You can pay to.
I see.
But then there's a few other entities that don't charge anything that are truly more accurate, I think, for other companies, right? I don't remember the name off the top of my head, but typically you can search, the rating of an insurance company, and they'll take you to a few different websites that'll list it. You just type in the name of the company in there, and it'll tell you what the rating is, right? Kind of like the Better Business Bureau, right?
Yeah, you put in the name of the company and look for anything bad.
Right, and yes and no. I mean, I hate to say that everybody leaves bad reviews on the internet.
Yeah.
Right? Hardly anybody leaves good reviews.
Yeah.
Right. So, but that goes for any company.
Yeah.
But what you're looking for is independent companies that all they do is manage ratings of insurance companies, right? So
I see.
I think Demotech is one that is
Demotech.
Yeah, Demotech is what I think it's called. I think it's DEMOTECH, and they're one of the entities that don't charge to list anybody, so they manage everything independently. And
I see.
They list everybody's rating companies on there. So
Okay.
it's a good one to look at too.
Yeah.
So look at that. Get the A rating company.
Yep.
Make sure it's good. If it's
Yeah.
A rated, you know they have the assets to cover losses.
Yeah.
Pretty much.
Okay. Awesome. Wow. There's so much information here that I think we did a lot of unpacking. Any areas where you, I guess you said longer than 5 miles away, but I'm like in Cottonwood. I don't know if there's a fire station where I'm at in Hooker Creek. I mean, maybe there is, probably is then.
You got one just down the road, just before the West Anderson.
Got it. Okay.
you got one right
Okay.
there.
Okay.
You're
That's
good.
cool.
Yeah. You know, we talk so much about the insurance, and it's gloomy. I get it. The good part about it is, you know, in the last quarter of 23, we've had Progressive showed a profit, right? Progressive is one of the largest companies we have in the USA, right? Largest automotive carrier next to Geico. So they put in restrictions early in 23, and they were able to show a profit in 23, the last quarter, which means they have decided to reopen in January. So we're expecting Progressive to reopen, which is great news, because then we have other companies that are actually following suit because they showed a profit. So I think 2024 is going to show some good light coming at the end of the tunnel.
Good.
Some carriers coming back. I think it's 2025 before you really see some normalcy in the insurance market.
Wow.
But I think it's a good sign that Progressive's coming back for sure.
Yeah. The negotiating with the state and the insurance companies, that can take a while. I've heard that this takes a while.
Yeah, and I've heard rumors that, you know, I have contacts with State Farm people that have told me that they're rumored is that 2025 is going to be the year that they come back.
Yeah. Yeah, another year, basically.
Mm-hmm. Yeah.
Yeah. Wow.
I mean, you got to realize they have 49 other states they can write insurance and still be profitable. Why do they need California?
Yeah, makes sense.
And that was the big risk they took, right? And they showed that they can still do it.
Yeah.
So,
Wow. Interesting.
right?
Yeah. So, any advice any advice to existing homeowners or even new homeowners on getting quotes, what to watch out for, tricks? I send a lot of people to you because, you know, you guys
Thank you.
have been able to really help in this market with insurance.
Yeah.
And you guys have definitely helped out a lot. So any advice, like how do they get a quote from insurance from Goosehead?
Yeah, I mean, Goosehead Insurance, our office is on Victor Avenue, right? You can call our office, 530-223-5600,
Okay.
right? You can ask anybody. You can Google search us. It's easy to get a hold of us.
Yeah.
My advice to anybody that has a current insurance policy, for the auto side, if it's renewing and it's gone up a little bit, pay it. There's not a lot of options out there, right? Other insurance companies for auto, just pay your bill. Don't let it cancel.
Okay.
Insurance companies are looking for ways to not write your insurance right now.
Yeah.
So don't not pay it. Pay it. For the home side, it's okay to shop around.
Yeah.
But do it before your policy cancels, right? If you get a lapse in coverage, it makes it very difficult.
Yeah.
Right? We don't want that. You know, and if you're buying a home, right, get the shopping done on the insurance done early, right? Don't let that be a factor in why you lose your home in escrow.
Yeah.
Right? We saved your clients a lot of money before. We're happy to do it again. But I recommend that for anybody, right? Make sure you know what you're getting yourself into before you get into escrow that you can't get out of.
That makes sense.
Right?
Yeah.
And I know you advise your clients of that too.
Yeah. You're saying if you go into contract, like do your due diligence on insurance.
Correct.
Absolutely. Yeah. Day one, I tell them get insurance quote.
I know you do.
Yeah.
Yeah. So
yeah.
That's the only thing I can recommend, really.
Okay, cool. I think that's most of everything. I mean, we covered a lot. I'm just going to skim through my questions here.
Yeah. Manufactured homes, too. That's a good one, right?
Oh, manufactured, yeah.
We've seen the pricing of houses go up, right? So you start seeing people resort to manufactured homes because the cost is more in their price area, right?
Yeah.
Still today, the only insurance company that will write manufactured homes is practically California Fair Plan.
Really?
So the good news is that our office is getting access to one of those two new carriers this month. One of them is actually this Friday.
Oh, wow.
Yeah. So
That's
it's
great
good
news.
news for us that we would practically be the only insurance company that can do manufactured homes
That's
outside of the
great
portfolio.
news.
Right. So super excited about that. So
Um, a lot of these companies, if you're a manufacturer, let's say I had State Farm and I had a manufacturer, did they get canceled? Or
it's possible.
they got renewed or grandfathered in, I should say.
There's grandfathered in is out the window. There's none of that anymore. But it just depends on the characteristics. I mean, State Farm,
If they
they
complied
can
with
renew the
everything,
policy. Yeah.
yeah, if they complied and did everything, but they're trying to cancel. They're trying to find ways to get
They'll make you do
legally.
the inspections and the photos and stuff like that, right? But and I don't have any indication that State Farm is canceling any of their policies. They're just not writing any new policies, right?
Yeah.
I have a lot of friends that are State Farm
I
agents. So,
have State Farm.
Yeah.
I like State Farm a lot.
Yeah.
I mean, they're a great company. It's just they're not writing.
They just paused business because they
Yeah.
couldn't get any rate increases. I get it,
Yeah.
totally get it.
Yeah.
Hopefully they come back.
Yeah.
But as of right now, I just know they're not writing business. I don't think that they're canceling anything yet.
Yeah.
So
Okay. So manufactured homes, you're getting two new companies that are carriers that are going to be able to write other than California Fair.
yeah, exactly.
Okay, cool.
So
That's great news. I mean, I have a lot of clients. I've done a lot more manufactured financing in the last 12 months than I have, I think, in my entire career.
yeah, right.
You know, so that's going to be great. That's good. Looking forward to that.
Cool.
Cool. Let's see. I'm just gonna look at some of these more questions, and then let's see. Were you gonna say something?
No, I know
No.
we had a lot of questions on there, so
Yeah.
there's a big topic here to talk about.
Yeah.
So, I mean, it's on everybody's minds.
So we talked about the future. So we're thinking in another 12 to 24 months, we could potentially see it back to a little bit normal
I'm hoping
for
so. Yeah,
insurance.
I think that's what it's looking.
If the state makes the negotiating and allows, still in higher cost because the cost of replacement is a lot higher.
You got to realize the costs are going to go up.
Yeah.
Again, the $800 yearly premium on home insurance is pretty much gone.
Yeah.
It just isn't going to happen anymore.
Yeah. Okay. All right. Let's see. We haven't even talked about commercial insurance, but I know that's a big topic. I don't have any. I have a friend does commercial insurance policies, but I heard that market is getting challenging. Commercial property.
I mean, it's still going to follow the same rules of fire hazard, right? There are still companies that are going to say no because the home's in fire and the building is in fire hazard. It just really depends on what it is, right? I do a lot of commercial. I do a lot of lesser's risk policies. So those are people that buy commercial buildings and then they lease them out to subtenants, right?
Right.
Strip malls, et cetera, right?
Yeah.
I do a lot of those.
Yeah.
I have carriers for that. Actually, more carriers for that than I do auto insurance, right? So,
wow. So that market, it's okay.
To me, it's perfectly fine.
Okay.
But I've heard that there are companies that are starting to non-renew commercial insurance.
Yeah. Okay.
Just a market they don't want to get in.
Okay. Awesome. Well, thanks a lot, Patrick.
Yeah.
I think we covered most everything. So to recap, I'm just going to recap it for our listeners. If you own your home, get another quote and then make sure you pay attention to your insurance policy. And then also we talked about the FireWise community. See if you live in a FireWise community, FireWise certificate. We covered that. If you're a new homeowner, definitely get a quote sooner rather than later.
Get it before you get locked into that term with your mortgage.
Yeah.
For sure.
Cool. Well, thanks a lot. I really appreciate you stopping by.
Glad I can help.
Yeah. Thank you.
You bet.